Hi everyone, in this video I'm going to do a brief review of Disney's fourth quarter 2022 results. Of course, the stock fell after these results were announced, and so let's look at the figures and try and answer the question if you should buy the dip in Disney stock after earnings. Content costs are soaring at Disney Plus, and this led to big losses in the streaming segment, but overall revenue increased by 9% in the fourth quarter to 3.4 billion. Earnings per share also increased to $1.75. This was up from $1.11 in the same quarter last year. Total subscribers increased by 14.6 million in the quarter, with 12.1 million coming from Disney Plus. And the company reiterated its target that Disney Plus should be profitable in fiscal 2024, although they did add a caveat to that, saying that it should be profitable if there is no major disruption in economic environment between now and then. Right? So that was something new that they added that they hadn't added before. Disney's theme park segment revenue jumped 36% to 7.4 billion, while operating income more than doubled to 1.5 billion. That was up from 640 million the same quarter last year. Of course, during the pandemic, when Disney had to shut down its theme parks, the company implemented several programs that has boosted profitability, one of them being a digital reservation system that allows management to control the pricing and the demand for customer attendance at Disney's theme parks. If it sees reservations are really high during one weekend, it can reduce or remove any promotions for that weekend. And if it sees demand is really slow for a certain month or a certain weekend, it can flex prices lower or it can add promotions to try and boost demand for that weekend. So this digital reservation system has been a huge upgrade to Disney's profitability and park management, which should be a boon for the company longer term, not just for this next few quarters. Disney also added a Genie Plus system where folks can pay a premium to skip lines, which has been gaining wide customer adoption, and so customer spending at theme parks has risen significantly. In addition to higher ticket prices, higher food prices, higher parking prices, higher hotel prices, now there's this extra fee that customers pay when they're at the theme parks to gain the privilege to skip lines. So Disney has implemented price increases across the board that for now customers are paying for now, right? This might not be the case if we enter in a recession over the next few quarters. Customers might say, you know what? That's too much. I'm not going to be willing to pay all that much, right? So revenue at Disney's linear networks or its cable channels fell 5% to 6.3 billion year over year, but operating income in the segment increased by 6% to 1.7 billion. Of course, if you compare it to its theme parks, it generated more operating income, 1.7 billion compared to 1.5 billion. But this linear networks business is a declining segment, right? People are cutting the cord on cable and switching to streaming services instead. So the outlook, the long-term outlook for this business segment is not good, and it's a significant part of Disney's overall business. And so you can understand why the stock price is coming down, because this part of its business is slowly declining and there's no end in sight to that. And then another reason why the stock price came down following the earnings announcement is that this final point I'm going to make here, which is in its D2C segment, direct to consumer segment, revenue increased by 8% to 4.9 billion. However, operating losses more than doubled to 1.5 billion dollars. So the company is investing in building out its streaming segment. That's Hulu, that's ESPN Plus, and that's Disney Plus. It's spending money to create content. It's also spending money to launch these services in new countries, specifically Disney Plus, and it has to implement an advertising campaign with each new country it launches in. And so this is heavy investments, heavy spending, and this is weighing on the profitability. And this 1.5 billion was more than investors were expecting, and that caused the stock price to fall. Now, management did say that this is the highest losses will be in its streaming segment. From this point on, operating losses will begin to decrease, and then eventually in fiscal 2024, which is in 4 quarters from now, the segment will become profitable. In one way the management expects this to happen is that it's raising prices, reducing marketing spending. It announced that on Disney Plus, it's going to raise prices by $3. That's significant. Users are paying roughly $7 in the US and Canada for Disney Plus. That's going to go up by $3 for the non-ad supported version, or customers can stay at the same price level, but they are now going to see advertisements shown to them. So depending on how much ad revenue Disney generates per user, and then depending on how many customers choose the non-ad supported version, you can expect, Disney investors can expect ad supported revenue to increase over the next few quarters and over the longer term. So to answer the question, should you buy this dip in Disney stock after earnings? I would say the answer is yes. If you're a long-term investor, Disney's intellectual property is highly sought after. It's long lasting, right? Disney is making movies on characters from several decades ago, right? Mickey Mouse, Minnie Mouse, still popular. They're still making money off of those characters in merchandise and shows and rides at the theme park and all of that. And that is going to continue over the next few years, over the next few decades. The theme park demand will fluctuate up and down based on economic cycles, but over the long run, the revenue and profits from the theme parks will increase, and the same with its streaming segment. In the near term, it will pressure its profit margins as it invests to build the channel out. Longer term, revenue and customer growth should continue to increase from this segment as well. So I would say yes, you can go ahead and buy the dip in Disney stock after earnings. Okay, so that's all I've got for this video. If you've gained any value from it, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.